Today's topic is Realty Income. They just had their Q3 earnings results. I'm going to share some information about that company and what's ahead for them, as well as my October and year-to-date dividends received in my taxable accounts. So, Realty Income is known as that monthly dividend paying company. When it comes to their earnings, they beat expectations. Revenue up 28% to $1.33 billion, net income up 12% to $261.8 million. Their revenue came in higher than analysts predicted, which shows that they continue to grow and stay resilient in today's market. They've been adding new properties and collecting steady rent from their tenants, which really shows how solid their business model is. And if you're not familiar with Realty Income, they are a real estate investment trust, a REIT. Their success has been driven by their mix of tenants. We're talking about big names like Walgreens, 7-Eleven, and FedEx. Because they're in sectors that people rely on no matter what, it's easy for Realty Income to keep the cash flow steady. And here's another fact. Many of their leases are long-term and require tenants to cover most of the property expenses. This is a huge win because it lowers Realty Income's own costs and adds to their earnings. So they have tenants like the supermarkets, the gyms, and big box stores that we all go to on a regular basis. So let's take a look at the stock performance. Over the last year, it's up 15.46%. Over the last 6 months, only up 5.07%. So looking at their stock performance, they've shown some stable growth, even in a market that's had ups and downs lately. This is because they are considered a defensive stock, meaning people turn to them in times of uncertainty for reliable monthly income. It's the kind of stability that makes them so attractive to both new and established investors. And let's talk a little bit about the dividend. The company continues dividend growth with a 2.9% increase to 0.789 per share, maintaining a payout ratio of 75.1% of the diluted AFFO. And AFFO is the adjusted funds from operations. So this is a performance matrix is used primarily when it comes to REITs, the real estate investment trusts. So Realty Income is known for continuously increasing their dividends and having a long history of dividend payout. So in time, this is an investment that I hope will check off both boxes when it comes to income and growth. So Realty Income, one of the biggest things that is driving their company right now is their expansion strategy. They're not just adding properties in the US, they are also focusing on their international acquisitions. And they're not just focused on one type of asset. They're diversifying in order to mitigate the risk and boost potential returns. For example, they have some recent acquisitions of retail properties in high demand industrial spaces. So they're making efforts to branch out to keep that income coming in steadily. So they're trying to show us that they plan on making these steps to be resilient even when times get rough. We can depend on that monthly dividend as well as them making sure that they are staying competitive with the strategies like I just touched on with the expansion. So as a shareholder, I was thrilled to see that the earnings were solid and see that they still have that focus on moving forward to make sure that they have that strong tenant base and they're poised to stay competitive even when the economy does slow down. But when it comes to this company or any other, everything is not going to be perfect. Let's take a look at some of the analyst ratings and what's going on in that area. So analysts are mostly optimistic. The thinking is that Realty Income will continue to add properties and collect from those reliable tenants, and its stock could see some gains. Currently, there are more ratings of hold than buy, which is what I'm currently doing, holding and adding a little bit to my position. I currently have about 109 shares. But as I said, everything is not perfect when it comes to the company. One of their ratings was recently lowered from $70.50 down to $70. And these are a couple of other recent from this month, November, ratings of another obstacle that Realty Income has also faced is clients that have gone through Chapter 11, like Rite Aid and Red Lobster, as well as, of course, being in the real estate area, the high interest rates that have not started to come down yet. So, ticker symbol O, Realty Income is all about that monthly income and tenant diversity that it can provide to you and your portfolio to give you that exposure to real estate. So here's a look at my dividends received for the month of October. I did receive a few in early October, but I included them in my quarter end update. So over on my account on Moomoo, I received $41.69, and on Webull, just $1.05. I have a few shares of Realty Income over there also. And here's a look at my dividends received year to date. I received $732.83, with my largest dividend coming from Realty Income at $266.42. So if you're not already, subscribe to the channel, give this video a thumbs up, and hit that notification bell. Leave me a comment. Let me know your thoughts. Do you own any Realty Income? What is your current performance in your portfolio? What monthly paying dividend investments or REITs do you currently invest into? Do you think that Realty Income's international expansions will help to boost their share price? Let me know your thoughts, and let me know what kind of videos you want to see more of. Thanks for watching. Okay, bye.